Good evening, and welcome back to Hopium Radio. Tonight's guest is Lawrence Lepard of the Bitcoin Opportunity Fund, joining new foundations to break down the big print. Why the debt spiral forces more money creation, why bond markets matter, and why hard money like gold and Bitcoin starts to look less like a trade and more like an exit. Settle in, keep your pace steady, and let the signal come through.
You're listening to Hopium Radio.
Why don't you explain why the Fed would fear deflation more than inflation?
Sure. So, and it's kind of a myth that they've set up. You know, the system is rigged against the average person, and you know, they've done that because they bought into the Keynesian notion that you have to have animal spirits and inflation to keep the economy going, and if you don't have those things, you know, you might fall into a deflationary trap, and we're going to repeat the Great Depression. I mean, that's the Great Depression is kind of the Keynesian boogeyman, right? That any time that, you know, prices fall, oh no, we've got deflation, we're going into the Great Depression, which is just absurd on its face, because history shows that there were plenty of periods of deflation in the 19th century and even early in the 20th century, and during those periods, the economy did fine. People did fine, living standards got better. So, you know, the Fed has set up you know, they bought this Keynesian lie and they propagated it, and they've set up a system where they benefit, financial players benefit, and the governments benefit as long as there's inflation. And they scare us by saying, boo, there's going to be deflation, therefore you got to allow us to print. And of course what that does is that gives the unfair advantage to all those who are closest to the printer, the people that we all refer to as quintillionaires. And you know, that's just the system as it is, and what it's led to is the chart in the, you know, the saddest chart in the book, or one of the saddest charts in the book, which shows that the top 1% have 92% of the wealth in this country, and that's because the top 1% have figured out how to game inflation, how to, you know, get rich on inflation. Inflation hurts the average person because they pay higher prices, their wages don't go up quickly enough to cover them, but the person at the top knows how to make inflation work in their advantage. So I think that's kind of the broad answer to your question.
Maybe just to tease that out a little bit more, if you were to steelman the argument from the Keynesian side, we have this type of economy where there's a lot of leverage, and a lot of a lot of the economy is based on asset prices remaining either where they're at or going up. What would happen if the housing market, you know, started to demonetize and be priced at more of its consumption price? What about, you know, the stock market coming down to price to earnings multiples that are more in line with historical averages? So, like, what would happen? Is there any risk to collapse?
Yeah, those things would be very deflationary, and what you're alluding to is the fact that we are in a bubble right now, the everything bubble, and that curing that would create a deflationary collapse if we were to allow all the natural prices to occur. The thing that's going to happen is that they're not going to allow that to happen naturally. I mean, and this, by the way, this should have started years and years ago. It should have happened in 2000, it should have happened in 2008, you know, et cetera, et cetera. We've never had, you know, an economy that has properly corrected since we went off the gold standard, really. Although, you know, it kind of did in the earlier 70s and 80s. But, you know, the prices right now are all unreal, and that's because all of these things have monetary premium in them, houses, etc. You know, what will happen, I mean, and you could say, well, you know, we've got to have this inflation because of all this debt, and they're correct about that. But, you know, I would say, you know, how do we get all the debt to begin with? We got all the debt because of the inflation, and people needed to use debt to try and create growth. So, you know, in a system of sound money, which is what I advocate for, what all Bitcoiners advocate for, you know, we wouldn't have nearly as much debt. You know, because debt would be a dangerous thing, because you'd be paying back whatever debt you took on in money that was worth more, not worth less. And so, in fact, you know, most of the financings, I think, in the sound money system, and this is actually how it kind of was in the 1800s. There were bonds then, but not as many. And a lot of things were financed just with equity financing. You wanted to build a business, fine, you raise capital in the form of stock, and if the company does well, it earns profits, and if those profits are good, they pay dividends. And so that, we'd see a lot more of that and a lot less of things getting incredibly levered in order to try and squeeze the last ounce of growth out of a particular situation.
So you've said the noble efforts behind DOGE, the Department of Government Efficiency, are too little, too late to plug the hole. Now that the administration is seriously considering Senator Lummis's Bitcoin Act to acquire 1 million Bitcoin over the next 5 years, is that also too little, too late?
No. That act would help a lot. I fear that won't get passed. But yes, on the Doge thing, as you recall, Elon originally said 2 trillion, then he said 1 trillion. Now he's saying maybe 150 billion. So we predicted this, my partner and I, David Foley, predicted this, 2 or 3 months ago that Doge wasn't going to be able to do what it said it was going to be able to do. But you're right, on the if we were to sell all our gold today and buy Bitcoin, that would certainly help things. It's hard to tell, to be honest, Mason, whether we are too little, too late on the monetary system. I think that Andrew Hohn's proposed, doing Bitcoin bonds where the government would issue debt and use some of that debt issuance to buy Bitcoin and then reward the bondholder with some of the upside in Bitcoin. I think that would be a good idea. I think it would help defease the debt. I think that if the government were to ultimately transition to a Bitcoin standard, well, the effect of that would be the value of the dollar would go down quite a bit, and if the value of the dollar went down quite a bit in Bitcoin terms, then the debt wouldn't be such a burden. The problem we really have is the debt is incredibly large as compared to the underlying GDP, and so those two things need to be reset. And either the GDP needs to grow a lot, and you can do that with high inflation, or the debt needs to be reduced in size, and you can do that by either having it default or collapse. And probably the likely outcome is some combination of the two. Some of these debts are going to fail, and there's going to be inflation to grow the GDP. So that's how we get back to a balanced system. But as you allude to, this is going to be messy. There's no easy way out.
And you mentioned the bit bonds there. Is that your favorite budget neutral way for the U.S. Strategic Bitcoin Reserve to acquire Bitcoin?
I think it would be a brilliant move. I also like Saylor's idea of selling all the gold and using that to buy Bitcoin. But let's not kid ourselves. Either one of those things is extremely dollar negative. And we can all say, oh, that's great, we need to get the dollar down. Well, getting the dollar down is the same thing as saying making the cost of goods and services go up. So if the dollar goes down in its overall value, that's a lot of inflation. But as I said before, there's really no way out of this trap that we're in without inflation, short of just a complete collapse and the debt defaults. And I don't think they want to do that, and I don't think they will do that. So,
were you surprised to see the 10-year Treasury yields rise even as the stock market fell after all of the Trump tariff stuff?
Yeah, that's a really great point. What happened on, I think it was April 7th and 8th was really kind of shocking, right? The market rolled over hard, went through 5,000. Initially, Besant got what he wanted. The 10-year yield went down into the 380 range. And so everybody thought, oh, this works. They put on tariffs, hammer the stock market, get a bid in the bond market, it's all good, right? And then a couple days later, the bond market started to slide hard, and we went from 380 to 450 or 60, I think it was, in a very short period of time. And I'm sure alarm bells were going off because you can't have the Treasury bond market malfunction. And I think my guess is what happened is Besant went to Trump and said, sir, we're losing the bond market. You got to basically delay these tariffs for 90 days. And so he did. And after telling everybody who was his friend that he was about to do that, so that they could load up on call options, he did reverse the tariffs for 90 days. And we had the largest one-day rally in quite some time. And now the bonds have settled down. So, yeah, of all the things I look at, the price of gold, the price of Bitcoin, the price of silver, the stock market, I think the bond market's probably the most important one, and the one that really creates a problem because the government has to roll over $7 to $10 trillion of debt every year, and so that interest cost is a huge line item now in the federal budget. And if the bond market starts to fall apart, they really only have one tool, which is to buy it themselves via quantitative easing. They can try to get the banks to buy it, They could change the SLR, supplementary leverage ratio, which allows the banks to buy more of it. They could maybe issue swap lines to the large hedge funds. They talked about doing that. There was a Brookings paper that said maybe we should have preemptive swap lines. But the problem they're encountering is, as you alluded to, Mason, it's kind of a third world problem, and it hasn't really happened before, except we've seen it in the third world, which is the following. The stock market's going down, the bond market's falling, and so rates are going up, and the currency's falling. All three of those things, those are what happen in developing markets that have inflation and currency issues. And so we are now seeing those three things happen in the largest, country in the world with a neutral reserve currency. I mean, that's not supposed to happen. Stocks are supposed to go down. There's supposed to be a bid for bonds because they're safe. We're not seeing that. The other thing that I would point out that's happened is very interesting, as you guys I'm sure are aware of, is the decoupling. That here we are and we have stock markets down for the year, and yet we've got, gold is going up like a rocket, and Bitcoin has got a nice bid. I mean, since that 8th or 9th date, Bitcoin is net up, and the stock market is actually down. We had that big rally, I think it was on the 9th or 10th, and the stock market's down from the peak of that rally. Bitcoin's up from the point it was at that time. So that's another positive trend for those who used to think that, well, Bitcoin's just a proxy for the triple Q. And I think that's because people are coming to realize that it has a safe haven component in the fact that you can't print it.
Yeah, and obviously less affected by tariffs and a trade war.
Well, that's right too. Yeah, it's kind of outside of the system, right? It's kind of hard to tariff Bitcoin or Bitcoin payments. Yeah, that's a good point.
So, Larry, I'm curious, obviously you've been following markets for longer than maybe a lot of our listeners have even been alive. And so I'm curious if you have a visual in your head when you think about the current fiscal situation. And so I'm going to maybe throw a few of these out there. Feel free to pick one of your own that's not on this list. But I'm curious if we can maybe try to come up with a visual representation for what the global economy actually looks like right now. So obviously we've talked about a bubble. You could think of it as a giant hole that needs plugging. You could think of it as a tower of leverage, maybe a boulder sitting on the chest of the U.S. economy when you're thinking about the deficit and the $37 trillion of debt. Or perhaps another common idea is a can, but a heavier and heavier can that's being kicked down the road. So I'm curious if you had to kind of come up with a way that you visualize it.
I like all of those. They're all apt, really. I do believe we are in a bubble, the everything bubble, driven by the COVID print of $5 trillion and 40% money supply growth and 0% interest rates from 19 to 22. So I think that created a bubble in absolutely everything, and the bubble has popped. Another analogy I would use earlier, people were talking to somebody else about the price of gold and how suddenly it's just moving in an uncontrolled manner in one direction, and I said, well, it's kind of like an avalanche. I mean, and the snow kept building up and building up and building up, the imbalance between the value of gold and the amount of money outstanding, but everyone trusted the money, so gold really wasn't moving that quickly. Well, now we finally got the last snowflake, and the avalanche broke loose, and it's got to go to its natural conclusion. So I think there's some of that. I think the can is a very good one as a metaphor for what the government is trying to do, and the can is getting larger and harder to kick because of the math of the situation. The deficits are larger. Interest cost is now running at 1.3 trillion. It's bigger than defense. And with each of these, I wrote the book. I titled it "The Big Print." This is really. It talks about what I think is the coming big print, but we've actually already had two big prints, right? We had one in 2020, and we had one in 2008, and of course 2020 was bigger and happened faster. 08, Bernanke took us from a 900 billion balance sheet, up to 3-something in peak, so it was like $3 trillion printed, but it took 3 or 4 years. In 2020 with COVID, they printed like 5 trillion in 18 months. So a lot more and a lot faster. And frankly, I think when the next break comes, and I think it's coming because we can see, the stresses in the markets, they're going to have to print more than 5. And so this is why I'm firmly in the camp of inflation is now, it's now a feature, of the system, and it's going to get worse.
I guess if you had to, you said more than 5 to kick the can down the road again.
Yeah.
And we won't hold you to it come a year or two from now, but if you had to guess, how many trillions do you think we're talking?
I don't know, 7, 10, something like that. I mean, maybe a bit more. How do I think it'll happen? I think the bond market will be the problem. Well, here's the scenario. Let me just paint a scenario. I'm not saying this is going to happen. I will be wrong, okay? But I'll just give you my most likely case, like up the middle of the fairway. I think the stock market's going to keep going down. I think we kind of hit, we really stopped the economy very abruptly. This tariff thing is a shock. Even if tomorrow he comes back and says, hey, we're just kidding, we're not going to do any of those tariffs, the damage has been done. I mean, it's, the economy is slowing, and we were in a bubble. So bubbles don't deflate gradually. I think the stock market will be going down, will be significantly lower by the end of this year. I think the effect of that will be unemployment will be up, and tax revenue will be down, and unemployment insurance will be up. So the whole notion of the budget deficit getting better, no, I don't think it's going to get worse. It was 1.8 last year. It's running at 2.3. Doge is only going to save 150 of that, if that. I mean, I think we're going to have a budget deficit of, well over 2, maybe 2.5, maybe even 3 trillion. So that's not helping. I think that when the bond market becomes aware of that, the bond market's going to say, oh my God, this isn't getting better, it's getting worse. I don't want to hold these 10, 20, 30-year obligations to the U.S. government. They're just losing value because I know what they're going to have to do. So I'm going to sell my bonds. Well, selling those bonds will make interest rates go higher. Interest rates go higher will make the budget deficit bigger, and that's the doom loop, right? And it's reflexive. So bigger deficit, more bond sales, bigger deficit. So it just goes around in a circle. So at that point in time, what I think the Fed will do is what they did when they had similar debt to GDP after World War II, at 130% then, 120 something now. The Fed will say, we are going to step in and buy the bond market, and we're not going to let rates go. We're going to fix the 10-year at 4.5, and we're going to fix the 2-year at 1. And if you want to sell them to us, feel free to sell them to us. Well, I think a big piece of the bond market is going to look at it and think that inflation is going to be higher than that, and go, great, sold to you. And so suddenly the bond, now keep in mind the bond market, the U.S. federal government bond market is like $37 trillion. So what if a third of the bond market woke up and said sold to you? Well, there's your Fed balance sheet going from 6.7 to 17, and a lot of that would get, it's reserves created in the systems with the banks would lend against it. That would flow into the money supply, and we'd have very high inflation. So rinse, wash, repeat, right? And the more inflation we get, the more the bond market says, nah, I'm not holding these, I'm giving them to you, Fed. The more the Fed has to print money. I mean, this is a sovereign debt crisis. We have seen similar things in other countries. It happened in Mexico, it happened in Venezuela, it happened in Zimbabwe. It's happened multiple times in Argentina, it's happened in Brazil. I mean, we know the pattern. If you do certain things, you get certain outcomes. Now, what was the mistake or the error that a lot of people I think made was they thought, well, America is the biggest country, the best country, the reserve currency. It can't happen to them. Well, guess what? It might have taken a bit longer, but if you play stupid games, win stupid prizes, right? I think we're going to have a very similar outcome. So that's kind of how I see it.
What does the world look like 5 years after the big print?
Oh boy. I think we have a very high inflation world. I think maybe, and the reason I wrote the big print is I think that what happens is the inflation is high, it's persistent, the economy is punk, there's a lot of civil distress and a lot of unhappiness, sadly. A lot of people are suffering. And my hope is, my hope it doesn't even take 5 years, but my hope is that politicians emerge, the RFK types and others who realize that sound money is the issue, that the problem we have is a monetary problem. And they stand up and they say, folks, we need to go to a sound money standard, and I propose that we transition to the Bitcoin standard or to the gold standard, which wouldn't be as good, but would be still better than fiat. And and voters are like, yeah, right on. I'm tired of this inflation. Absolutely, let's do that. That's the hope. And there's some evidence that maybe that we'll get there. I mean, Scott Bessent was a gold guy. Scott Bessent last summer, the Treasury Secretary, said, hey, there's a possibility we're going to have to reset the system here monetarily. It's imbalanced, and something that would look like a Bretton Woods conference, which they held in 1944. And if that happens, I want to be at the table. So that implies to me that he's thought about it. And then I thought it was interesting this weekend. I'm not sure what he was doing, but Trump tweeted, because he's such a wild card. Trump tweeted, he who has the gold makes the rules. I'm thinking, well, hang on a second. Is he thinking of taking us back to the gold standard? I mean, who knows? But the point is that, to answer your question, Mason, the way out of this and the good news on the other side of this is if we return to sound money, things get better. And that's the message of the book. Sound money is a very important issue. Sound money is the core issue. It's really what's caused a lot of the problems and the dysfunction. And it's not impossible to go back to it. It's painful. It's definitely painful because there's a reordering of things. What used to be valuable isn't valuable, and what used to be cheap becomes more valuable. But once that reordering, and that caused a lot of pain for some people, but once that reordering takes place, everyone then says, "Oh, okay, I understand these rules. I know we've got sound money. I know this. I can't borrow cheap and invest it in things. I mean, it's a safer and better system." And so, that's what we hope to achieve. That's where we hope to go.
So following up just quickly on he who has the gold makes the rules, do you think we actually have the gold? Is it in Fort Knox?
That's a great question. So I've been thrown off of Twitter. It's pretty interesting. They said there was some suspicious activity on my account. I don't know why. Recently I was tweeting quite a bit about how I'm almost certain there isn't gold in Fort Knox that they claim to have. I say this based on a lot of forensic evidence, even meeting with a guy who was alive during the Johnson administration and knew people in it that said that Johnson raided Fort Knox in order to support the London Gold Pool between 63 and 68. And so I do not believe we have all the gold we say we have. Ron Paul told me he doesn't either. I think obviously there's gold there. We didn't take it all, but I think it's been compromised. Maybe that's why there's such big gold shipments into the U.S. right now. Maybe Bessent and Trump want to go back to the gold standard. They're trying to refill it. I don't know. But what I would say is that if we don't have it, that's very unfortunate. Whoever stole it or rehypothecated, that's kind of a crime. And one of the other tells on the fact that I think we don't have it, I mean, it hasn't really been fully audited since the Eisenhower administration. And the excuse for not auditing it is the cost. I mean, please. I mean, this government spends $7 trillion a year. I mean, I bet I could get a team of gold analysts and auditors in there, and in the space of 2 months, with a lot of clipboards and paper, we could write, and assaying devices to make sure that it's not lead or titanium or whatever the fake ones. We could determine if it's all there or not. I'm sure we could, and the cost of that, if it were measured, if it were $500,000 in cost, I'd be surprised. So to me, it's actually critical. And by the way, by saying all this, I mean, I'm really pointing out one of the huge shortcomings of gold versus Bitcoin, right? I mean, anybody who knows what a company's Bitcoin reserves are, they can look at the address and see them. Nobody really knows where the gold is, who has what, how much, if it's real, if it's fake, etc. So, but yeah, I don't think we do have it, and that's rather unfortunate. But what it actually argues for, I mean, if Bessent and Trump do decide to go the reroute route, it argues for them to say, and by the way, China has made a huge bet on gold. We know China has a lot more than the officially reported gold that they have. And they love gold, and they don't particularly like Bitcoin based on their activities in the past. We can kind of surmise that. It would be very smart of the U.S. to just skip the gold reset and go right to a Bitcoin reset. Whether we'll do that or not, open for debate. I mean, the Lummis bill and the strategic reserve are very big positive steps, but I'll believe it when I see it. I mean, we need to actually start buying Bitcoin for the U.S. government. And as far as I know, that has not happened.
And the logic certainly tracks when you look at how excited Trump and Elon were to audit the gold reserves, and then how deadly silent they've become since then. maybe because they realized it wasn't there, and that revealing that to the world would only hurt the bond market ahead of a refinancing even more.
That's exactly what I think happened. I think they got read in on what's really going on, and suddenly it's become very, very quiet on that topic.
Yeah.
Because if it were there, why not go audit it, right? And it also fits with the really enormous gold imports into the United States. I mean, it's possible that those are just. Look, everybody is aware that the monetary system is in trouble. You can see it in the price of gold. And so, I'm sure and the United States has a lot of billionaires. And if you were a billionaire and you had it in fiat terms and you realized that the monetary system is in trouble, and I actually had one of these guys as a client. He's not a client anymore, but he used to be. Back in 2019, 2020, when that whole thing was going down, he called up one day and said, I'm buying $40 million worth of gold. Just boom, like you or I would buy a car. It was kind of amazing. But there are a lot of billionaires in the United States. They see the monetary system starting to go the wrong way, and they might be making that same call. And then if they've read anything, they're smart enough to know that, hey, buying an ETF isn't the same as owning the metal and having it in your own vault. And so they buy and say, and by the way, I'm buying this gold. By the way, deliver it. Send it to me. So that's one possible explanation for all the transfers into the U.S. The other possible one is they're filling at Fort Knox again. I'm not sure which it is.
And that gets to your point in the big print, which is that you see gold, silver, and Bitcoin, kind of the three hard monies of the modern era, as a way for individuals and organizations to protect themselves from the big print. But I want to maybe pose a fourth option here. So you talked about the decoupling that we're potentially starting to see, Bitcoin being treated as a safe haven asset while the stock market rolls over. Perhaps one of the most clear and blatantly obvious places to see that for the market, stock traders to see that in, is things like MicroStrategy, these Bitcoin treasury companies having green days while the rest of the stock market is red. So I'm curious, would you consider throwing Bitcoin equities into that as a fourth category?
Oh, very much so, very much so. Yeah, I didn't really mention it much in the book, just because the book was written not for Bitcoiners and not for the super sophisticated, although I think Bitcoiners like it. I really tried to write the book to be readable by somebody that's not in the financial world. And so to go to the MicroStrategy model and what you guys are doing and what Dylan is doing, with Metaplanet and all that and so forth. To go into that was just kind of another advanced level above which I'm like, I don't want to confuse them with that yet, But yeah, absolutely. You guys, it makes a ton of sense. Look, Michael Saylor doesn't say it because it's politically improper to say it, but he's running a speculative attack on the dollar. Let's face it, that's what he's doing. He's basically saying, he's doing, there's a guy who did this in Weimar, Germany, he was called the Inflation King, and it's Hugo Stennis. And, he's borrowing in dollar terms because he knows the dollar is doomed, and he can pay it back in, worthless future dollars, and he's investing in the hardest asset on the planet, which in this case is Bitcoin. So, that bet is going to pay off enormously well for him. I'm pretty sure Michael Saylor is going to end up the richest man in the world, and MicroStrategy will probably end up the most valuable company in the world. And so I think people who emulate that strategy are going to do extremely well. Yeah.
I think that's right. That would be my projection as well. But to that point, Saylor has, said expressly, and his actions show it, when he can, he'd like to not be fighting a battle at all and just be providing incentives. And one of the things he's done recently is introduce STRK and STRF, these coupon-based fixed income products on MicroStrategy. Yep. And I'm curious if this is going to get him into the hot water that he's been trying to avoid, because when you look at these coupon rates, not only are they higher than what treasuries are providing global investors, but they're totally collateralized by the Bitcoin on the balance sheet, whereas there's, a question as to what is collateralizing these bonds. So I guess at what point do these fixed income products from MSTR compete with the bond market? And is that where he's going to maybe take it a little too far and get noticed in the wrong way?
Well, I don't know. I'm not familiar enough with those products, and I'm not familiar enough with, the securities regs to know if they're going to come after him on any of that stuff. But my limited understanding of it all is just that he's trying to craft various products for various pools of capital so that people can participate in Bitcoin. But I mean, the convertible bonds as an example, when he did that, it was brilliant. And what it did was it opened up a whole category of bond money that wouldn't otherwise be able to, have a participation in Bitcoin, right? And it created a cheap source of capital for him because people were willing to buy those bonds with almost zero interest rates or very low. I think one of them was 75 basis point interest rate because of the convertibility feature. And then, of course, as Bitcoin's gone up, they've become the best performing bonds of that whole category by a large measure because of the upside in Bitcoin. And so I think he's just trying to do the same thing with the preferreds. I mean, a slightly different subset of buyers, slightly different bucket of money. And I don't think he's going to get into any trouble on those, but I don't know. I'm not a securities lawyer, and I don't know, I don't know all the issues. I mean, I will say this. I mean, a lot of people say, well, look, the guy's using leverage. That's really, really dangerous. And I say, yeah, but if you actually go and look at the math, the bonds that he's got, the converts he's got, I mean, a lot of them are going to convert, as we know. And, there's still a very small piece of his capital structure. I mean, I think less than 10% of total market cap of the company. So if he had to peel off a little bit of Bitcoin to make a bond payment, that wouldn't be the end of the world, in my view. And I think he's been prudent. I mean, I will say this. I think there was a time when he sweated a little bit. Remember because he got in before the Sam Bankman-Fried dipped to 15,000, and I think his average cost at the time was in the 20s or 30s. And I remember his appearances when the price was 15,000. They weren't quite as exuberant as they have been at other times. And I think like any other human, I mean, fortunately he had the maturities far enough out that he knew that he probably was going to be fine. But I'm sure there was a time when he was thinking to himself, "Am I sure I'm right about this?" because he was underwater there for a while, right?
Absolutely, as most of us probably had a few questions when we were dipping down there.
I mean, when it was at 15, I'm thinking to myself, boy, these were at 60 not long ago, but I'd been through the two prior cycles, and I was like, I know how this ends. I'll just relax and buy more.
So for the listeners, make sure that you're following the show, subscribing on channels, because we got this next question from someone on X.
Oh, good.
So we know you believe that we're approaching the tipping point where financial advisors may be failing their fiduciary duty by not taking a Bitcoin allocation seriously.
Yeah, I had a conversation with a lawyer somewhere. I'm trying to remember who, and it was also on X, and these guys brought it up, and I'm so glad they did. Yeah, how long is it until somebody sues their financial advisor, and the financial advisor is supposed to be considering all financial alternatives and presenting them to their client and giving and says, you behaved irresponsibly by not making me aware of the best performing financial asset in the past 16 years. And I mean, and it could be, and it could be for a big amount, and it would be a class action. And so imagine, you're a brokerage house. I don't know, you're JD Edwards, or pick some name, doesn't matter. And you've taken the policy that you're not going to let, I mean, I think most of them now will actually let their brokers accept unsolicited offers, which means if the client calls up and says, buy me some Bitcoin ETF, they'll do it. But I think a lot of them are unable to push it. In other words, the broker can't say, hey, Mr. Client, you should consider this Bitcoin because it's a good performing asset. How long is it until some class of investors go see Bitcoin, let's say Bitcoin goes to $1 million. Some class of investors say, hey, you were my financial advisor. I asked you about Bitcoin. You said, nah, it's no good. Or, nah, you don't have to focus on that. Or you're my financial advisor. How come you never showed me this thing? Which, when you could have showed it to me was the best performing asset, and now has gone up 10x since that time. You've caused me damage. I mean, I think that's a fascinating, and I've heard from lawyers that case might actually have merit at some point. And boy, oh boy, that would be something, right? And suddenly all these financial advisors who are avoiding people or cautioning people about it and saying stay away, they'd actually realize they have liability for providing such shitty advice. I can't, I'm waiting for the day when that happens. I predict that probably will happen, and whoever brought it up on X, it's a great thought, and I had heard it in another conversation somewhere else, and I thought, wow, that's really interesting.
Do you think it's in the next 5 years, 10 years, if you had to put a number on it?
I'll bet it's within 5 years, because I'll bet that we within 5 years, I think there's a high probability we'll see $500,000 to $1 million a coin. And I think now, I think, although, the percentage of people in this country that own Bitcoin, I'm still sure is quite low, probably under 5%, maybe under 2%. I don't know, with ETFs, maybe it's higher. But I think I think if you asked somebody in this country, what is Bitcoin? I mean, 6 years ago, most people would have said, I don't know. I think now most everyone at least knows what it is. They've heard of it. It's in the zeitgeist of everyone knows that Bitcoin exists. They may not like it, they may be opposed to it, whatever, but they know it's out there. And so with that being the case, if somebody, and your financial advisor is supposed to tell you how to make the most money possible. And then if suddenly they realize the person down the street that's not a financial advisor bought a bunch of it and made 10x their money, they're going to go to their financial advisor and say, hey, what the hell? You didn't tell me about this. What are you doing? And then they're going to go to a lawyer and say, hey, this guy he told me he knows what he's doing. He told me he's going to protect my financial future. He told me that he's going to present good opportunities to me. That's his job. Why didn't he do this? Can I sue him? And the lawyer will say, yeah, let's sue him on a class action basis. All right? I mean, man, won't that be interesting? So yeah, I think it could happen within 5 years.
Yeah, it's one thing to not recommend Bitcoin, but I'm sure so many of these financial advisors have outright said, no, don't look at that, don't even do your own homework in your private time, it's a Ponzi scheme, etc.
Can you imagine the depositions? I mean, hey, I remember asking you about this and you told me it was a bad thing. I mean, is the guy going to lie? No, I never said that. Well, yes, you did. I remember it. It'll be interesting.
So now that you're an author, Larry, is there a book not about Bitcoin or finance that deeply influenced your thinking around sound money?
Let's see. That's a great question. Not about Bitcoin. Yeah, I mean, there's so many books. One I read recently was by James Turk. It was about gold and liberty. He just wrote it. It's a great book. The Fourth Turning, I think, was a very important book for me. I don't know. I've probably read every book there is on gold, and so they all influenced me. I would say probably, all the Austrian books, von Mises and Rothbard, influenced me enormously. I mean, there's kind of a compendium of books. I can't really point to one and say, oh, this was the one. I mean, with respect to Bitcoin, I can actually point to Safe's book and say that was what really put me over the orange pill line. I mean, I was kind of halfway orange pilled before, but that one just cemented it for me. But that's not answering your question, because you said not Bitcoin. So I would say it's all the books on gold that I've been reading for years and years and years, and there have been many of them. I mean, there's a famous guy named Edwin Vieira who is a monetary scholar, probably the world's preeminent monetary scholar, and he wrote a book called Pieces of Eight, which is now out of print. I've got one of the original copies, and I see they sell for like $10,000 a copy, but it's a fabulous book on the history of monetary history of the United States. So things like that. I mean, it's interesting because I love Bitcoiners. I mean, you guys are the young guys with the spears charging the castle, and we're gonna burn the castle down. I love it. But one of the things about Bitcoiners that sometimes I find amazed, I mean, particularly the younger ones, is like they kind of act like they invented sound money, and they did. I mean, they invented the best form of sound money, which is Bitcoin. But before Bitcoin came along, guys, there were actually a lot of us out there, carrying that same torch. We were using a different vehicle, which is we were carrying the gold standard. I mean, there've been gold bugs around since Roosevelt days, and when he grabbed all the gold. So. And we've suffered mightily, for all of those years. And then we were really, I say this jokingly, but I love it that, it's like when you guys showed up, it was like we got the reinforcements. You know what I mean? I mean, we were getting old, we were pretty beat up, and they created a lot of paper gold, and we weren't winning, to be honest with you. But Bitcoin came along, and now it's like we are clearly the sound money people. We are clearly the winning team, in my view. And that's a good thing.
Yeah, it feels like I'm on the early 2000s New England Patriots or something like Chicago Bulls in the 90s. It's just
that's exactly right.
Too much winning.
Yeah, there's about to be too much winning here, and that of course will be somewhat problematic, in terms of keeping egos in check and helping those who didn't win and all the other things. I mean, but But as I say, I mean, people say, well, you know, you're going to get filthy rich off this thing, and I don't know if that'll happen or not. But you know, it's you know, the free market's there for anybody. There's nobody stopping you from buying Bitcoin, and there's nobody stopping you from educating yourself on Bitcoin. And hey, I even wrote a book about that. And so, you know, it's readable and accessible to anyone. I wrote it at a level designed to make it fun for somebody with no history of the monetary system to read and understand, because we really have been taken advantage of by the banks, the Federal Reserve, and those who know how to game the system. And we got to take that power back, you know, if we want things to be fair again.
Absolutely. At Acropolis, we promise to stay humble. You're never going to see us telling people to have fun staying poor. We're going to continue being good stewards of sound money.
Yeah, I hate that phrase. I really hate that phrase. I mean, look, we're all in this together, and you know, and it doesn't matter when you get it. It's just as long as you get it. And you know, I mean, one of the things I should address, guys, and Max did a good job of addressing this in the forward to my book. There's so many people who think we're too late. You know, that we're really too late. Oh my God, Larry, you bought it at 10,000, and you tell me to pay 85. I can't 90. I can't do that. And I just say, guys, zoom out for a minute. You know, we have 900, you know, this is Jesse Meyer's chart, which is in the book, a brilliant chart. And we have 900 trillion of financial assets. Bitcoin's 2. That's 0.2% of all the assets in the world, and yet this is the soundest money ever invented. Huh. You know, I mean, we could go up 10x. Bitcoin could be at $1 million a coin. We're still only 2% of all the money out there, or the assets out there. So, you know, you're not too late buying it at 85. You're just not.
And only 2% of today's money, not even taking into account future printed money.
Yeah, wait till they do the big print, right? And that 900 is 1.5, you know, whatever. I mean, yes. So, yeah, you're just not too late. Another metaphor I use for that, I've used it on other podcasts, I think it's a helpful metaphor, is that, you know, the fiat financial system based on Keynesianism and debt and money printing, it's the Titanic. It's the old technology. It's failing. It's hit the iceberg of sound money, and you know, the lifeboat seats are Bitcoin and gold. They're sound money that can't be printed outside of their system. And yeah, I bought gold at 300 and 1,000 and cheaper, and it's 3,000 now. And I bought Bitcoin at 400 and 10,000 and 20,000, and it's a lot more expensive now. But those are both seats in the lifeboat, and so, you know, okay, you're not in the lifeboat yet. I get it. You know, the seats are still there. They now cost 3,400 and, you know, 85,000 a coin. And do you want a seat, or do you want to stay on the Titanic? You know, pick one. You know, and it's more expensive. Yeah, that's true. But you know, if the Titanic really goes all the way down, you know, the seats are priceless. So, and I'm not suggesting that financial system's going to, you know, end up in hyperinflation. I don't think it will. I think we'll just have very high inflation and reset to a sound money standard. But I do think that we will have inflation. Therefore, I do think these assets will benefit in either case.
And that concludes tonight's transmission with Lawrence Lepard. If the system survives by printing, then inflation isn't a mistake. It's the plan. Protect your time, protect your purchasing power, and we'll catch you in the next broadcast, right here on Hopium Radio.